The rule defines digital assets very broadly, and we would pull in NFTs and stablecoins, and there's no transaction minimum. So imagine you spend, $5 worth of USDC to buy a cup of coffee or something, then whatever platform you're using to do that would have to furnish a 1099.
This content is brought to you by Uphold, which is a great crypto platform that I've been using since 2018. Uphold has all the top cryptocurrencies, Bitcoin and all the altcoins. In fact, they have 260 plus cryptocurrencies on their platform. You can also trade precious metals, stablecoins, and 37 fiat currencies. In addition, they are available in over 150 countries. And this platform is fully reserved. They do audits, so you can trust that your funds are safe, no commingling, no lending out your funds. If you'd like to learn more about Uphold, please visit the link in the description. Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Marisa Coppel, who's the senior counsel at the Blockchain Association. Marisa, great to have you back on.
Thanks for having me back on, Tony. Appreciate it.
Yeah, Marisa, look, you and the folks at the Blockchain Association have been very busy. I've seen all the letters and the comments you submitted with a variety of things happening with the government and crypto. So there's a lot to go through. Let's start with the Treasury and the IRS proposed reporting for crypto taxes and so forth. Tell us about that and the comments that you folks submitted.
Yeah, for sure. So the IRS, which is part of the Treasury Department, they issued a notice of proposed rulemaking back in, I believe it was August, regarding the change in the definition of broker under the tax code as applied to digital assets. And the rulemaking essentially was following the passing of the infrastructure bill toward the end of 2021. And then the infrastructure bill or the act essentially directed the Treasury to do this rulemaking, interpreting the statute that Congress passed into law. So fast forward 2 years. I mean, we spent I feel like there were so many rumors of this rulemaking coming out, at some point within the past 2 years. And then finally, 2 years later, it came out. And the rulemaking basically just does what it interprets Congress's definition of broker. And we filed a comment letter on Monday, as did over 125,000 people.
Wow.
Which is just absolutely wild. And I think says a lot in terms of just how existential this proposal would be if finalized. The way that Treasury interprets the term broker is way broader than what Congress set in the statute. So a broker is essentially a middleman who effectuates transactions, on behalf of somebody else.
Right.
And the word effectuates was broadened by Treasury to basically mean someone who facilitates these transactions. And it's sort of unclear what that means, but the way that Treasury interpreted it would essentially pull in software developers of DeFi projects. It would pull in non-custodial wallet software developers. And then, of course, it would pull in the centralized entities a Coinbase or a Kraken that would be a broker, or I guess arguably would be a broker under the definition. They are, a more traditional intermediary, and they have access to information. When you sign up for a Coinbase account, you have to do all the KYC procedures. And so they're storing that information safely, and they can then furnish 1099s, which is the reporting obligation that you're probably familiar with your Vanguard account or whatever you have. But there are issues with the proposal as applied to centralized entities also, which we describe in detail in our comment letter. One, for example, is that the rule defines digital assets very broadly, and we would pull in NFTs and stablecoins, and there's no transaction minimum. So imagine you spend, $5 worth of USDC to like buy a cup of coffee or something, then whatever platform you're using to do that would have to furnish a 1099.
That's crazy.
Which is crazy. Like the Treasury Department estimated, I think this was a couple of weeks ago, that they would have 8 billion reports to go through, which is just wild. I don't know how they plan to actually go through all of these filings, but I mean, that's on them to figure it out, I guess. And then like the time to comply is really short. Even like a centralized entity would have to build entirely new systems in order to comply with this proposal. And that would take like millions of dollars. And the proposal is pretty lacking in terms of their economic analysis and like their analysis of the cost and burden. So we make those arguments in our comment letter. And then we spend, the second half of our comment letter really discusses why the proposal is unworkable as to non-custodial wallet software developers and DeFi software developers. And I'm sure your listeners, are familiar with how this tech works. But if you think about a DeFi project, it's basically impossible to gather the customer information that like you would need in order to do this type of reporting. They would essentially have to do a very robust form of KYC and like collect social security numbers, names, addresses. And then beyond that, even if they did collect that information, which like collecting it, they would have to store it. So it's just, thinking about who would do that and how they would store it when the project is decentralized is basically impossible. And then even beyond that, they would have to figure out, the basis for each transaction. And if the transactions, it's non-custodial, so like how are they supposed to know where the person or, other project or whoever like owns that wallet address, where those funds originated from?
Yeah, it just seems pretty crazy that they're trying to do this. So question for you, do you think this is a lack of education or there's some nefarious reasons behind it? Like they're really trying to jam up or slow down this industry, or a combination of both, right? Obviously, we don't know what they're thinking, but from the Biden administration, we haven't seen very positive things about crypto. So what do you think about that?
Yeah, I think it's kind of a combo. And honestly, so I testified in front of the IRS on Monday, and listening to everyone else's testimony and like the questions that I, along with others, received, it does make me think that they're thinking about these issues like very critically, and that they maybe didn't fully realize the impact that the proposal would have on the non-custodial wallet software developers and DeFi developers. And then also like, the stablecoin issue I mentioned earlier. Like, I don't know if they had thought about that before or really understood the impact of it. But I do think that like, Treasury's been tough on our industry, although they've been more thoughtful than, let's say, like the SEC, for instance. And I think their motive feels like less rooted in bad faith. But I'm hopeful that they will leave room for innovation to happen in the US, because the result of this, if passed in final form or passed in the current form that it was proposed in, would essentially mean that DeFi projects would either have to shut down or move overseas or centralize, which obviously defeats the purpose of the project.
Yeah.
So innovation would just like be very, very limited And it's always hard to convince regulators of the value, of this technology. And that's like our job in educating them. So I think in that respect, there's some education that needs to be done. But on the other hand, they could be trying to slow it down. And obviously, Treasury is part of the administration, which sees like the negatives about the industry and like the risks. And like that's the piece of it that they could be focused on.
For sure. So, I mean, on the other side, tons of comments coming in. You mentioned 125,000. So let's see what they come up with, right? I think we just have to wait and see. But it seems like they have a lot of comments to go through, and hopefully that helps sway them and bring some education to help them understand what's happening.
Yeah, they definitely have a lot of comments to go through. It's possible that they'll issue a reopening release and ask for more comments. This is what happened with the ATS rule that the SEC proposed. They initially proposed it like spring of 22, and then they issued a reopening release this year where they like asked for more comments. So it's possible that they'll do something similar. I'm hopeful that they won't just like finalize it in the form it was proposed in, though.
Sure. So let's talk about the SEC and the SAB 121. Recently, the U.S. Government Accountability Office released their review of that. And I know the Blockchain Association submitted 2 letters about that. Tell us about SAB 121 and what the GAO had to say and your comment letters around that.
Yeah, so SAB 121 SAB stands for Staff Accounting Bulletin, and it's basically the SEC's view. They issue these staff accounting bulletins to essentially like express their view of accounting practices. And this one in particular expressed their view of like crypto related accounting. It was initially released, I think it was March of 22. And when it came out, we thought that it read a lot like a rule, like under the APA, where it was mandating that companies, change their accounting practices. And if they didn't, it could potentially lead to enforcement. But they released it outside of the notice and comment procedure, like through this staff accounting bulletin. And so companies, were figuring out how to follow it. And there was a lot that was written about it and why it was bad and, et cetera. And then it was Senator Lummis that sent a letter to, and I can't remember if there was another letter. There might have been one more letter that was sent to the Government Accountability Office, the GAO, after SAB 121 was released, basically asking the GAO to issue an opinion as to whether the SAB was a rule under the Congressional Review Act. So agencies are required to submit their proposed rules to Congress under the Congressional Review Act. If it's, a rule as defined by the CRA, which largely mirrors the definition of a rule under the APA. So that letter was submitted to the GAO, and the GAO has to respond. They can't just like ignore it, but there's no real time frame that they have to respond in. And so they recently issued their opinion that declared that they thought that SAB 121 is a rule under the Congressional Review Act, and that it meets the definition of a rule under the APA. So this opinion is not binding on a court, although it would be persuasive if there was an APA lawsuit that claimed that the SEC violated the APA by issuing this as a staff accounting bulletin rather than like an actual proposed rule that allowed notice and comment. So it would be persuasive on a court, but it's not binding. But there is a strategy in Congress where Congress can essentially try to get the votes to then force the SEC to like repeal the staff accounting bulletin.
Mm.
Obviously, our Congress is divided. That like proposal or bill would need to be signed by the president as well. So it's sort of a uphill climb to get that done. But that's like the CRA strategy. But I do think the GAO's arguments, in the opinion, bolster a potential APA litigation.
Mm. When you say litigation, do you mean companies in the crypto industry suing the SEC?
Yeah, so it's possible for a company who is negatively impacted, like harmed by this staff accounting bulletin, to sue the SEC for violating the Administrative Procedures Act. It's also possible for a trade association to sue the SEC, and there's something called associational standing, which means that an association can essentially step in the shoes of their members. So if one of their members is harmed, the association can file a lawsuit on their behalf.
So, Marissa, I got to ask, is anything cooking up behind the scenes with you guys and any of your members?
I mean, it's something that we've been considering for like basically since SAB was released, and there's nothing like final, and I can't give too many details because it's of course privileged, but it's definitely something that we're considering. And I don't think it's, this impacts like non-crypto. It's not just like a crypto rule. It also impacts the banks. So I think the banks are also thinking about this, because if banks hold crypto on their balance sheet, they have to essentially follow this staff accounting bulletin, and the burden is really high, and it would basically make it very, very hard for a bank to hold like custody of crypto assets.
Yeah, and it made me think of BNY Mellon. I remember, I think it was 2022 when they got approved to be able to, well, they launched crypto custody services, but I can imagine a rule like this would, slow them down.
Yes, totally.
They could essentially sue the SEC if they were impacted, right?
Yeah, no, they totally could.
Interesting. Well, I'm very curious to see who in the industry steps up to bat and goes after the SEC.
Yeah, and I mean, it's not like it's really like a procedural issue. Like, it's not just a crypto issue. So a bank potentially is better positioned to file this lawsuit. So yeah.
Interesting. So then I also want to talk to you about the Grayscale appeal and that ruling, and Grayscale winning it, and these judges taking the SEC to task, calling them arbitrary and capricious, and denying the SEC, denying the Grayscale Bitcoin Spot ETF. What is your take on that ruling? And do you feel that it has lit a fire under the SEC that they need to get this in line now, because everybody's looking at them? The optics look bad. Members of the House, financial services, and all these guys are hunting Gary Gensler right now. So what are your thoughts on the whole situation?
Yeah, I mean, I was very excited to see that ruling come out. The argument, like the oral argument, was fantastic. John Verrilli, who was the lawyer representing Grayscale, he just did a fantastic job. And I think that the panel of judges asked very, very thoughtful questions that like really indicated they were thinking critically about the issues. And their opinion was just great. Like, the panel was, both, I think it was two Democrats, or maybe one Democrat and one, but it was a mixed panel. Not that like should impact a judge's decision, but we all know the reality. Right. So I was very excited to see the opinion come out. And I think that it's part of like the shifting in the tide, where the SEC is starting to lose these cases. So that was always good to see. And then in terms of like timing of when their ETF will be approved or won't be approved, although I think it will be approved, because they would have to then find another reason for it to not be approved, So I'm not sure like what the timing is. I've heard like rumors, that it could be the beginning of January. So we'll see.
Yeah, I hope they don't try to come up with something. I think the entire industry and so many people would be upset. Like,
Yeah.
really, like we're delaying this again. So we'll see what happens. Yeah, I was speaking to James Seyfert of Bloomberg, and he's saying he's giving January 10th as that
Yeah,
first.
I've heard that.
So we'll see.
Yeah.
Fingers crossed. Hopefully, it's sooner than later, before Christmas, and we have a nice rally. But
Yeah, that would be nice.
that'd be nice. Oh, and I don't think we spoke since the Ripple ruling, because there's been quite a few things, like certain lawsuits dropped against Chris Larson, Brad Garlinghouse. What are your thoughts on that? And do you see the industry using this as case law? As the SEC's in different litigation with different people.
Yeah, so I think that the SEC's decision to dismiss the case against the individual defendants, I mean, it was awesome. Like being sued as an individual is a nightmare, and it's great for them that the case against them was dismissed. I think it was probably strategic on like the SEC's part. They probably want to appeal sooner. So this will allow them to do that most likely. I do think that we've already seen the district court opinion being used in other cases. So of course, like a district court opinion is not precedent on any court,
Sure.
even in another district court. So we really need the case to go up to the Second Circuit, because if the Second Circuit issues an opinion, that opinion will be binding on all of the district courts in the Second Circuit. And then it will be, persuasive for other courts as well.
And then we have the trial scheduled for next year. So, are you seeing this wrapping up, potentially going to trial, or maybe they settle, maybe Ripple pays whatever small fine or whatever fine the SEC wants them to, or they agree upon, and then this thing wraps up? Or do you think this plays out in the courts even further?
I think it might play out. I mean, it's really hard to tell. I don't know. It would be surprising if like they could agree on a settlement. I think the SEC would have to like really fall on their sword, for that.
So let's talk about Coinbase and the SEC, both suing each other. I'm hoping Coinbase can come out of this victorious. What are your thoughts? I know the Blockchain Association, you guys have submitted letters and so forth. What's your take on that?
Yeah, so we filed an amicus brief in the enforcement action that the SEC filed against Coinbase, and that is going to oral argument in January. So I can't remember which day. I think it's the 20 something, but that will be going to oral argument, and then the court will decide one way or the other. So I'm like hopeful that this judge understands these issues. I think it's the same judge that issued a very positive opinion in this class action dismissal it was the Risley case. This was the class action that was brought against like Uniswap and I think A16Z, Paradigm. And it was it essentially, she basically said, like, acknowledged the lack of clarity in the industry and that Congress needs to do something, and that it might not be the SEC's role to, act how they're acting. So that made me hopeful for Coinbase's case.
Yeah, I remember reading that as well. So that's definitely a positive. And, I'm still just scratching my head, and I think a lot of people as well, that the SEC greenlighted Coinbase knowing their business model, knowing what they do.
Yeah.
They're not Amazon selling products. They sell cryptocurrencies. Like,
Right.
you can buy, sell, trade, and now you're suing them. It's really ridiculous.
I know. And it's like a change in their administration, right?
Yeah. So, with that said, and I don't know if you can answer this question, but let's say, we don't know, but what's going to happen with the election? Let's say the seat is changed to Republican and new chair is appointed to the SEC. Can that new chair come in and wrap up these or get rid of these lawsuits?
Yeah, they can if they want to. There's always like voluntary dismissal.
Got it. Okay. So that's maybe something to hope for.
I know. We'll see.
We'll see.
We just got to
Uh,
wait it out, right?
yeah. Final item here before I let you go. Have you guys submitted anything on behalf of the Binance versus SEC situation? Any thoughts on that case?
No, we haven't submitted anything in that. I think like similar arguments that would apply to the Coinbase case, but the facts are very different in that case,
Right.
obviously. So
Yeah, very different. Yeah, that makes sense. I was just I forgot to check if you guys had done that, but that makes sense. Well, I'm hoping for a Coinbase victory and Bitcoin
same.
Spot ETF approval soon. So, Marisa, always a great chatting with you. Great insights. Thank you.
Yeah, for sure. Thanks so much. This was a great conversation.